Hello traders, and welcome back to Explain the Charts. Today is September 29th, 2025, and we are diving deep into Bitcoin, ticker BTCUSD. The market is currently a battlefield of conflicting narratives, so our goal today is to analyze both the news and the charts to get a clearer picture. First, let's talk about what's driving the sentiment right now. We're seeing major headlines that can cause a lot of confusion. On one hand, analysts are predicting that Bitcoin could undergo several major corrections, similar to what we've seen with high-growth tech stocks. There are even specific calls for a steep drop towards $60,000 before we see new all-time highs. However, on the flip side, long-term bullish sentiment remains incredibly strong. Galaxy Digital's Mike Novogratz mentioned Bitcoin could, of course, reach $200,000, contingent on a dovish Federal Reserve. We also have ongoing news about nation-state adoption entering an accelerating phase and major institutions like BlackRock recommending portfolio allocations to Bitcoin. This creates a classic tug-of-war between short-term fear and long-term optimism. The most pressing piece of news, however, comes from a report just a few days ago on September 25th. It highlighted Bitcoin's struggle to break the crucial $113,500 resistance level and pointed to a massive $17.5 billion options expiry happening right around now. Market bears are predicting this event could push the price down towards the $107,000 max pain zone, a level where the most options contracts would expire worthless. Now, let's see how this news lines up with what the charts are telling us. Looking at the daily chart, we can see the broader story of the last year and a half. After a strong uptrend that began in mid-2024, Bitcoin put in a major all-time high around the $123,000 level back in mid-July of this year. Following that peak, we saw a sharp correction down to the low $100,000s, which is perfectly normal after such a parabolic run. Since that July peak, the price has been consolidating in a wide range, essentially moving sideways. We've had several powerful rallies and subsequent pullbacks, creating a choppy environment for traders. The price has been building a large structure, defined by the July highs as ultimate resistance and the August-September lows as critical support. Notice the significant volume on the large down days, like the drop in early August and the more recent one just a few days ago, indicating strong selling pressure at higher levels. Conversely, we've also seen strong buying step in at the lower end of this range, preventing a complete breakdown. This brings us to the most recent price action, which is where things get very interesting. The recent struggle near the $113,000 to $116,000 area has been a key theme, perfectly aligning with the news reports we just discussed. Let's zoom in on this recent period to get a better look at the battle taking place. Here on the Focus Daily chart, we can see the action since late August. Price attempted to rally in early September, but was rejected right around that $113,000 level. After another attempt, we saw a very bearish candle on September 25th, where price fell nearly 4% from a high of over $113,700 down to a low near $108,600. This candle is a direct reflection of the news headlines talking about the failure to break resistance. This $108,600 level has now formed a clear short-term support zone, which has been tested again since. The fact that this support is holding is a mildly bullish sign, but the failure to reclaim higher levels keeps the bears in control. This level is just above the critical $107,000 max pain zone mentioned in the news, making it an incredibly important area to watch. A break below the support at $108,600 would open the door for that flush down to $107,000, potentially causing a cascade of stop-loss orders. On the other hand, the news also mentioned a potential short squeeze if Bitcoin could reclaim $116,000. Looking at this chart, you can see that a move above the recent cluster of highs around $113,000 to $116,000 would indeed invalidate the bearish structure and likely force short sellers to cover their positions, adding fuel to a rally. Right now, we are pinned between this critical support and formidable resistance, creating a state of high tension in the market. To understand the current momentum, we need to look at the lower time frames. Switching over to the 1-hour chart, we can analyze the price action since the big drop on September 25th. You can clearly see the sharp decline from above $113,000 down to the support level we identified near $109,000. Since that low, the price has been in a slow, grinding recovery. This is not an explosive V-shaped bounce, but rather a methodical climb, indicating cautious buying. We can see the price forming a series of higher lows over the last few days, which is a constructive sign for the bulls in the very short term. However, each push higher has struggled to find strong momentum, with sellers stepping in as we approach the $112,000 to $113,000 zone. Currently, we are consolidating just below the $112,200 mark, coiling for the next move. This consolidation on the hourly chart is the market absorbing the recent news and deciding on its next directional bias. The key battleground here is clear. Can bulls push through this immediate resistance and challenge the daily resistance at $113,500, or will sellers take control and push us back down to test the $109,000 support? The low volume during this consolidation suggests a big move is coming once conviction returns to the market. Let's drill down even further to the 15-minute chart to see what's happening right now. On the 15-minute chart, we see the intraday price action of the last day. Yesterday, on September 28th, we saw a strong push higher, culminating in the price touching above $112,600. However, that move was met with selling pressure, and the price has since pulled back and is now trading sideways in a tight range between roughly $112,000 and $112,400. This very tight range shows extreme indecision in the immediate short term. Neither buyers nor sellers have the strength to push the price decisively in one direction. This is typical behavior ahead of a major event like an options expiry or a significant news release. Traders should be extremely cautious trying to trade within this tight chop. The more important takeaway is to watch for a breakout from this range. A break above $112,600 could signal a retest of the daily resistance, while a break below $112,000 could signal that sellers are regaining control for a pushback towards the hourly support levels. Now let's put it all together on the daily chart and talk about potential scenarios. So, to recap, the market is caught between conflicting fundamental drivers and is technically wound up for a big move. Let's outline the key price levels you absolutely must have on your chart. Immediate resistance is the $113,500 level, which has been the source of the recent rejection. Above that, the $116,000 level is the trigger for a potential short squeeze. The ultimate resistance remains the all-time high around $123,000. On the downside, immediate support is the recent low around $109,000 to $108,600. The most critical support level to watch is $107,000, which is the max pain price for the options expiry and a major technical support zone from August. So, what are the likely scenarios? Let's talk about the bearish case first. Given the weight of the massive options expiry and the repeated failure at resistance, I believe there is a 60% probability that we see a sweep of the lows and a test of the $107,000 support level in the coming days. A daily close below $108,600 would be the first major warning sign that this scenario is playing out. Now for the bullish case, which has about a 40% probability in the immediate short term. If buyers can absorb the selling pressure and push the price firmly above $113,500 on strong volume, it would be a significant show of strength. This would invalidate the immediate bearish thesis and shift the focus towards a potential short squeeze, targeting $116,000 and then higher towards $120,000. The key trigger to watch is a decisive breakout from the current consolidation. Things to watch for: a spike in volume, which will signal the start of the real move, and of course, any news related to the Fed or institutional adoption. That's our in-depth look at BTCUSD. Thank you for joining us on Explain the Charts. Let us know your thoughts in the comments, and be sure to like and subscribe for more content. Trade safe, and we'll see you in the next one.